Hi, Assalamualaikum. We are from Group 2 and today we want to present about the purchase cycle. Okay, firstly, for the process involved in purchase cycle, generally is first from the user department to purchasing department and then to the receiving department.
So these are examples of source of documents involved in purchase-related transactions. So firstly, we have purchase requisition, which is a document used to request for goods and services. Next, we have voucher, which is used to control payment for acquired goods and services. We also have vendor invoice, or also known as bills from the vendor. Next, we have cash disbursement journal. It's actually a journal that contains column for cash, accounts payable, and cash discounts. We also have EFT, or also known as electronic fund transfer and checks, which is a disbursement approved by an authorized individual to pay for goods and services. We also have purchase order, which is a document that includes the description, quantity, and quality, and other information about the goods and services. And lastly, we have accounts payable subsidiary ledger, which is a list of unpaid vouchers.
Okay, let's move on to the next slide, which is journal entry and account involved.
This is the flowchart for purchase cycle. Purchase cycle start with user department, purchasing department, receiving department, accounts department, then preparation of financial statement and identification of management assertion, then handing the unaudited financial statement to external auditor to be audited.
Okay, next we want to proceed about the internal control, risk area, management accession, and the audit procedure that involved in the purchase cycle. So, firstly, for the occurrence, the risk area is complaint from the customer about the purchase that has not been received. And what the management need to do is they need to record purchase with the approved purchase order. And for the audit procedure is testing sample of vouchers to verify the presence of an authorized purchase order and a receiving report. Next, for the completeness is the possible misstatement that might occur is the missing records of purchase made, and the internal control is matching the receiving reports with the seller invoices and record it in a journal, in a purchase journal. So for the audit procedure is inspection of received reports by tracing a sample of received reports to their respective seller invoices and vouchers.
The next internal control is approving acquisition request.
So the internal controls that are being implemented here is recording purchases as soon as the goods or services are received according to the existing procedures. However, the risk area here is the purchase transaction might be recorded in the wrong period. So the suitable management assertion is cut off. This is because cut off ensures that the purchase-related transactions are recorded in correct accounting period. So the suitable audit procedures that could have been taken here is inspection of purchases journals by comparing the dates on vouchers with the dates they were recorded in the purchases journal. So the next internal control is reviewing accounts that are charged for acquisitions. However, the possible misstatement here is purchase transactions are not properly classified. So the management assertions are classification. This is because classifications ensures that the purchase-related transactions are properly classified. So the suitable audit procedures that the auditors could have taken to obtain audit evidence is by doing inspection of vouchers, by examining a sample of vouchers to make sure and to identify whether the vouchers are properly classified.
Okay, so now we proceed to the inherent risk of purchase cycle. So the inherent risk of purchase cycle is a high classification error, which means the purchase appear in the wrong financial statement accounts. This means that the stock may be unintentionally put the payable account in a wrong financial statement account. This will make the liability account understated. So the management assertion is classification, and what is the control that a company can implement is reviewing accounts that are charged for acquisition and recording purchase acquisitions. Um, so when the auditor look at the company's control, the audit procedures that auditor can do is inspection of financial statement account by tracing a sample of receiving documents to their purchase journal. So this is to make sure that the staff correctly put the account payables in the correct financial statement account.
Okay, next we will proceed to the purchase case that required us to identify the weakness and the inefficiencies in Lismore companies' purchasing policies and procedures, and we have to make recommendation to improve each of the weakness and inefficiencies. So, firstly, the weaknesses of the Lismore company's purchasing policies and procedure is the material on hand are not reviewed before any order are placed. So our recommendation is the material department need to check the availability of the material on hand first and confirm it with the purchasing department before purchasing department start to place any order. Next, Lismore companies weakness is high reliance on vendor as majority 90% of the Lisimore's requirement of critical raw materials is supplied only by a single vendor. So what Lismore company need to do is they need to hire more vendor for the critical raw material to prevent from the shortage of critical raw materials or disruption in operation when something happens to the main vendor.
So the third weaknesses and inefficiency here is the materials department manager inspect all incoming goods just to ensure that the vendor only adhere to quality specifications and not quantity standards. So our recommendations here is the material manager need to check both quantity and quality of the materials provided by the vendors and not just focusing on the quality specifications only. So for example, the materials manager could have done a physical counting of all the incoming goods. So next, rush and expedite orders are made by production directly to purchasing department without the concern of materials manager. This is not good as it can affect the production of normal order. So our recommendation here is purchasing department need to get confirmation from material department about the availability of materials before proceeding with the rush and expedite order. This is important to ensure that the amount of materials is enough for producing both normal and rush order.
Okay, next, the material department manager prepares purchase requests based on a 4-month production schedule and not on requisition received from the operating department. Material department manager should prepare the purchase request based on the requisition that has been prepared by operating department because the purchase requisition is more efficient as compared to the schedule. This is because operating department always make an adjustment to the production level based on the current order that they have received rather than the schedule that has been prepared way earlier each year. Next, the immediate purchase of material needed to accomplish engineering changing by purchasing department. This is one of the weaknesses because Before purchasing department purchase the material, purchasing departments need to consult with other department first on whether they want to proceed with the changes, because the changes not only affect the purchasing department but also other department as well.
The last weaknesses and inefficiency in the case of Lessimo Company